All right, and we're live. This is episode 54 of the Zeall Show, where all the shows are unedited, unfiltered, uh, a bit of planning, but also unscripted as well. Today, just before we get into the main show, I just have some messages every single time. I have a newsletter called I changed from the Zeal Show Weekly to the Scale with Trust newsletter, where I'm actually writing my book in real life. Okay, so I'm trying every single week. There's a chapter that will come out on a Tuesday and a chapter that will come out on Friday, and the book should have 25 chapters. After that, I will get an editor to do the editing, and then I'll have a book based on that. What that book is about is especially with the news that came out from the European regulators that for all the companies, fintech companies that have pre-registered before Mika and now need to register into Mika, 75% of them will fail. This basically shows a lot. It shows that either the compliance is not ready, and then when the regulators need to meet with the founders don't know what they're talking about. They can't give the confidence to the regulators. It's the same here with MAS. When the Monetary Authority of Singapore, many of them are saying that they will withdraw the applicants' license application. The main reason is the founders don't even know what they're talking about. Because this book is actually to address that issue, to change the mindset, and hopefully, for going forward, we'll have less failed applications because the more apps, the more services out there that are licensed, the safer for everyone. Which segues to the main part of the show today. I have a very, very important guest and a friend. I She was my first guinea pig for doing my podcast, which I totally failed with the sound and that. But that was at the time when I was at my previous firm, DTC Pay, where I couldn't juggle with all the different roles I have. I was the CSO, the Chief Strategy Officer, the Head of Compliance, and then I also need to do the podcast. I didn't have time to actually push it to the next level. Now that I am out alone, I'm not with the company, I'm able to do that now. So I'm bringing her back because her insights were very useful, but I just can't push it out because the sound is really, really bad. But this time around, everything is fixed. So now let's get on to the show. Let me just change it over. Great. Anu, how are you?
Hey, thanks for having me on the show, Anson. I'm good. How are you?
Great. Again, so same thing. There's a mini bug. Happened last week as well. Just 1 second. Okay, I'm still trying to fix this. AI keeps telling me the wrong thing, but just let me fix this. That's why we'll have the editing of a short video later on. Uh,
Yeah, no problem.
okay, okay. Can you say something now?
Hey, Anson. Good
Good,
to be on the show.
good. The echo is gone. Great, great.
All right.
Good. Thanks, Anu, for being on the shows. Yeah, so I can tell you the very first time when I talked to you, there were so many things I learned from the interview, and now after 54 of these Zeal shows, I'm pretty sure there's a lot I can also learn from you. And first thing is, very congratulations on your 3 years at Coinbase.
Thank you.
Personally, how do you feel once you received the award? I saw the picture on LinkedIn.
Yeah, it's been a great journey. So when I joined, actually when I signed the contract, we were in a crypto bull market, and then Terra Luna happened, and a lot of things happened, FTX and everything. So it kind of turned into a bear market, and now we're back to kind of a bull market again. So I've seen like a full cycle, and like worked on multiple license applications and just regulatory liaison on a lot of areas because the crypto landscape has been evolving so quickly. It's been a really busy 3 years. It feels a lot longer than that.
Right? It doesn't matter if you're in compliance or you're a founder. 1 year in real life feels like 5 years in crypto. So I treat it
Exactly.
as if you have 15 years of experience already.
Exactly, that is how I feel. Yeah.
Great, great. Okay, so let's go back to the origins, how you got into here, because you're one of the, I would call it the very few, where you are from the traditional space, more than 19 years in compliance, and then be able to uh, assimilate into crypto very, very well, right? And last week I was talking to one of the the head of compliance at the Swiss stock exchange, which there's a digital asset portion of it called Six. She also has been, we have been talking about how traditional compliance people sometimes aren't compatible coming in to understand the crypto side of things. So, but before that, the very first question to ask you is, what has drawn you into compliance and the regulatory space?
Yeah, sure. So I'm a chartered accountant by training. So I started with Ernst& Young in their statutory audit division. So who's looking at, as a financial auditor, looking at numbers, but I wasn't quite happy with that. I thought it was just really scratching the surface, not really getting to the bottom of how things work, how companies work. So it wasn't in depth enough for me. And I thought of taking a leap into internal audit from there. So I got an opportunity with Prudential to join their internal audit team. That was quite a good experience as well, talking to a lot of senior folks. Very early on in my career, I was talking to the CEOs of different Prudential entities, and I had been in a job only for like 2 years or so. So that was a really good experience talking to a lot of senior management, understanding a lot of challenges that departments and all the companies are facing. From there, I moved into compliance within Prudential because what I felt is audit was really kind of coming in later, and it was a bit of a, without offending the auditors on the channel, but I felt it was a bit of a thankless job because you come in later and you tell what went wrong last year instead of really working with the business on a real time basis. And when I looked at my compliance teams in Prudential, I thought they were doing a great job working real time, solving real time issues for the business. And that kind of drew me into the world of compliance. And yeah, it's been kind of over 14 years in compliance. And before that, audit and statutory audit. Yeah, would never go back to do anything else. I love
Wow.
solving problems for the business on a real time basis, and I really like what I do.
But this is amazing because in compliance actually works, for the people that don't know, works very closely with the audit people, especially on a annual basis. You need to work with them. Did your auditing knowledge that you had, your expertise before, when you bring it in, does it make helps you with compliance? Because in a sense where you will need to run be working with business, but at the same time you can empathize with the auditors, what they need. Did that experience back then help you with what you have now?
Yes, yes, absolutely. So auditing compliance department was just one of the many audits I was doing, but I was also performing audits on, say, product launches, like how does Prudential launch products, for example? Are we following a process? Is there proper governance around product launches? I was auditing all departments, including HR, payroll, all the teams that you can think of. And I was focused on the asset management business. So Prudential, I know, is known more as an insurance brand, but they have a big asset management presence as well, which is called Eastring Investments in Asia. So I was looking at all these different functions, how they work. So definitely, I have a lot of respect and a lot of appreciation for what audit brings to the table, because it's really like kind of cleaning up your house before there is an external inspection. So it's always a great idea to kind of get that internal input and get things in order before it's too late.
Yeah, it's very, very interesting. So now, in terms of the definition of compliance for that many years that you have from the TradFi to now in crypto, has that definition changed for you? What compliance actually is, or throughout the years, not much evolution has happened within the compliance space?
Definitely a big change. So I'm also mentoring a lot of young compliance professionals. So one question I get asked a lot is, how do I make the shift from traditional TRAD 5 to FinTech compliance? one sentence that summarizes it all is you need a complete paradigm shift. You need to kind of really change your mindset when you're in fintech compliance, because the world of traditional financial services and TradFi compliance, everything is really set in stone. All the regulations are clear. There's been regulatory clarity for years, so there's really not much scope to innovate or to kind of think differently. It is, everything is clearly available, and the processes and everything are all set. Whereas when you look at fintech compliance, normally you have challenges of resources. You don't have challenges so much on systems because the systems are new, so the challenges are different. I think in traditional financial services there's a problem of legacy systems. For example, there are a lot of old systems which are being used and they are not really serving the business, and it's difficult to get rid of these legacy systems. So that challenge is there with traditional financial services and doing compliance and TradFi. Whereas in fintech compliance, you have new systems like constantly, they are being changed every 2 years. The old system is kind of discarded and there's a migration to a new system. So systems wise there's no problem, but in terms of processes, because the regulations are changing so quickly, you really need to adapt. And normally you face resource challenges because there's not enough people in that world with that niche experience. So you'll always have kind of lack of right talent. Also, you are expected to work in leaner teams because you're expected to rely more on systems than people. You won't have like huge compliance teams that you would see in banking or asset management. So the challenges are very different. Also, what I have noticed is that because these are really fast growth companies, they are high growth companies, you need to be a business enabler. You cannot have carry that old baggage of compliance officers, how they're usually tagged as, oh, this is a business prevention team. You cannot be a naysayer. You need to be able to say yes and need to find solutions. So be more solutions oriented. Don't just focus on the problem. Don't just go to the business and say, oh no, this can't be done. Find ways, because the business sometimes doesn't know what will compliance agree to. So it's actually a better idea to kind of go to say yes, I see you have this issue, I see you want to launch this product, but how about we do it differently? How about if we do this, it'll comply. Maybe give them probably 2 or 3 solutions, and then some of it will work. At least one of the solutions will work for them.
But would you, when you're launching new processes, because I mean by in textbook definition, the word compliance means comply. Comply means they already have something existing. Would you worry every time when you see new things that, oh my gosh, if we launch this, but this is sort of gray, what if this happens? What if that happens? How do you think through in terms of your thought process?
Yeah, that's a great question, and I do get that question a lot. So I feel in the world of AI that we are living, there's AI can pretty much do the job if it is a clear yes or no. If you just want to look at the regulation and say, does the regulation allow this? Does the regulation not allow this? So those things are really easy, and that is not where a compliance officer really adds value, or at least a senior compliance professional adds value. As you kind of get more experience and you kind of go up in the kind of hierarchy of your business, and you're seen as someone who is able to solve problems for the business. So it's the gray areas where really the magic happens, because you say, okay, fine, if something is clearly not allowed in regulations, that is an easy one. Like I said, you don't even need a human to do that job. AI can do that job, right? If it is clearly allowed in regulations, then it's yes. Again, the same thing. But what about stuff where there's no, regulations are not clear? It is really based on your professional judgment and based on your experience that you have kind of had exposure to the regulators, to auditors, how they think about this issue. And that's not enough, because it's not just about making a call within the gray areas. You also need to be able to justify it to auditors or regulators when they come down for inspection, right? So for me, I think what really matters is complying with the spirit of the regulation. So really kind of try to understand if a regulator is asking businesses to do something, or they have issued a certain regulation in a certain area, but it is silent on certain aspects within that regulation, then what is it that they are really trying to achieve? And will you be able to justify with your documentation, with your rationale, to say, yeah, this is why we did it this way, and we believe that it still kind of complies with the spirit of the regulation. And to be able to do that, documentation is really important, and that is what I learned from my audit days, saying anything you say, anything you discuss in a meeting and agree, please document, have meeting minutes to say this was discussed, these factors were considered, this is our risk appetite of our business, and this is why this is the right decision for this business.
Yeah, exactly. Documentation, especially, and then once you have the documentation, you also need to log your rationale behind whatever is written, right? Because whenever
Exactly.
regulators come to you, they will ask you if it's in the gray areas, why did you do this? What's your rationale behind? And then if you don't have it, you need to think through what you actually thought through. And that's what they actually want to know. So
Exactly.
you're right. So in terms of talking uh, uh, to regulators for the past um, 14 years, when you need to interact with them, how is it different on that side of things from the TradFi side? I'll give you context for that. Every time when I hear from the banks, my friends at the banks say, "Oh, MAS is so it's so strict, or always screaming at us, always um, like really do things by the book." But then when I'm interacting, yes, it is also strict even on the fintech side, but the mindset when they ask the questions are different. How for you, how was it like when you interact with regulators back then and interacting with them now in the fintech and crypto space when you're in this current space right now?
Right. Yeah, it's different. Definitely, it is different because I think it's just the frequency of interaction is a lot more when
Mm,
you're in fintech, because the pace at which a fintech company operates is very different from TradFi. You have a lot more new products, you have a lot more initiatives, a lot more expansion plans, more license applications, right? So the frequency of interaction is a lot more. I think the other challenge is also understanding the technology, because all these sectors in TradFi, like insurance, banking, asset management, regulators have a complete understanding of how they work, because these are like insurance is one of the oldest business, right? So they've known how insurance works, and there's only so many ways you can have a new product. You can call it something new, but essentially it is either term life or an ILP, for example, right? But when you come to a fintech company, even if it's like a crypto company, like two crypto companies operating in the same space, operating under the same license, their fund flows, their products can be so different from each other, because everybody's operating under a different business model. How much you outsource is also different. Some companies like to have things more in-house, some outsource more. So we're talking about like thousands and thousands of different business models. Also, the technology is constantly changing. What was true yesterday may not be true, in a year's time. So the technology is constantly changing. So I think regulators across the world are also finding it challenging to keep up with the changing technology. So within their teams, the supervisory teams, there is different levels of understanding of the technology. So that kind of poses another challenge, because sometimes you really kind of need to get to the basics and really gauge how much they know, and obviously without offending them, explain to them how things work. So there's a fine balance between kind of really achieving that growth, talking to regulators, keeping a good relationship, and still focusing on growth and expansion. So that is definitely a challenge, but that is exactly what makes a fintech compliance job really exciting, right? It's not the checkbox exercise. It's not just, okay, regulators ask me something, I just respond to them. It is not. It's not kind of very predictable. It poses a lot of challenge, but that also makes the job kind of really satisfying, and adds kind of this complexity, which is I think great for anyone.
how is your thought process like you said, right? Normal compliance TradFi compliance officers, compliance people are usually not really catching up with the tech so quickly, right? And there's always new products that comes out, whether it is from Coinbase or not, or whether it is from other companies. how do you on the daily basis really catch up with all these things? Do you read the news? Do you read the X? Because for example, crypto Twitter, they're so active. How do you keep up?
Yeah, there's yeah, I agree. There's a lot of information overload on all of us. And there's just so much to absorb on a daily basis. And then, you obviously have your day job and weekly deliverables and internal meetings and all of that. So it is challenging, but I really like kind of, networking within my circle. Because like Anthony and I, when we meet and we talk about what's happening in our sector, or I talk to other compliance officers, other peers, that kind of helps me in a more informal way. But of course, there's always, Twitter, there's Telegram, there's just so much happening on social media as well. Um, yeah, there's a lot of sources of all the stuff. Actually, LinkedIn also has some really good articles. I see people posting like good stuff on LinkedIn as well.
Yeah, yeah. LinkedIn has sort of evolved. It's definitely quite different now. Back then, it was really mostly people bragging about where they went, events that they went. But now there's actually more. I think that they've changed the algorithm to allow more news, more up to date news on.
There's a lot of content. Yeah.
Yeah. What specific thing on LinkedIn now that has caught your attention? What specific news inside crypto?
Um, I think one is our own. We got added to the S&P
Mhm.
500, which I thought was
Congrats on that.
quite
Yes.
it was taken, yeah, which was taken really well. Nothing specific, honestly, but yeah, there's like a lot of I see like a lot of companies really pursuing the use cases, like payments use cases of crypto, which I think is really good, because that is an area where regulators have been questioning the crypto sector for years, saying, yeah, all this is fine, all this technology is great, but what is the real benefit? What is the problem you're really trying to solve? Or are you a solution looking for a problem? So that is a question that has been coming from regulators a lot. So the more crypto companies, try to really kind of push for the payments use case, I think that will that definitely is a threat to a lot of other institutions, like a lot of banking institutions. But that will kind of prove that, yeah, there is a strong use case, and why crypto sector should be supported by regulators across the world.
Hmm. So in terms of that, there obviously has been the main use case that people are talking about at least in the regulated crypto sector are stable coins. So
Yeah.
from your perspective, as for the viewers to know, Singapore is also trying to push the stable coins framework. There has been a lot of companies, circles also in Singapore as well. But the framework is is there, but yet to become law. So other countries such as the US is also pushing it. Europe is pushing it. Europe actually has a very defined definition of what stablecoins are. Okay, they're calling already linking the word e-money with stablecoins, right? But in terms of the growth of stablecoins, like you were saying, that is crypto are crypto people looking for a problem with their existing solution. Now it looks like the banks and everyone want to take the stablecoins narrative as well, because that's what US is trying to push the stablecoins act as well. What are your thoughts on in terms of stablecoins? Where do you think it will go? And from a compliance perspective, uh, do you see it go is when the volume really grows, even at this level, it's growing a lot. From a compliance perspective, is it going to be hard to manage in terms of doing your daily work?
So I think this area has really evolved over the last 2 or 3 years. I think maybe about 2 years ago, there was more talk about CBDCs, because what governments and what regulators were trying to do is push for. I think they like the payments use case of crypto, and they were trying to say, okay, is there a way we can control it more via CBDCs? But I have seen globally that that hasn't really taken off in a big way. We thought 2 years ago that it'll move quickly, and there'll be more progress in that area, but that hasn't really happened. So naturally, the kind of the next best option for users and customers is stable coins. So stable coins is interesting, right? It kind of takes away that volatility from crypto prices. um, that's why I think it's a very attractive kind of TPT and crypto holding for customers, because if they are not wanting to trade, but they actually want to seriously pursue the payments use case, which I said previously, right? Like that is what regulators are really looking for, to say, show me the use case, show me the utility of why crypto is good. Um, so that is an area which is really upcoming. And in fact, I don't think it increases compliance burden. To some extent, I think it reduces it, because you're taking away a big issue that regulators have with crypto, which is volatility in prices. So when you look at the way regulations have evolved over the years in the area of crypto, right, they started off with AML regulations. So they said, just make sure, guys, you all take care of your money laundering risk, terrorist financing risk, and then later was like proliferation financing risk as well. So take care of all these areas, and you're good. But then the regulations have evolved since then, and now they moved on more to consumer protection. So that is what you would see in Singapore, in Europe as well, to say that regulations are now looking at, oh, please don't advertise or market crypto. So that is a way to protect consumers from getting into crypto just because the advertisement is very, very flashy and they think, oh, they can make a lot of money. The other area is safeguarding, what happened with FTX. Obviously, after that, there's been a lot of focus on safeguarding of assets, because this safeguarding requirements in TradFi has been there for the longest time. It's always been the case, right? Have anything you hold on behalf of your customers is held in a separate account, and it is a trust account which you cannot access. So in the event of the institution's bankruptcy, there will be still payouts to the customers. So all these themes are emerging over last 2 or 3 years since the FTX bankruptcy. So in terms of consumer protection, I think one of the things is also volatility in prices, which regulators worry about. And yeah, I mean, stablecoins really solve that issue, and it can facilitate cross-border payments. There are countries in the world where the local currency is really weak, and the local currency is actually as volatile as crypto. So for these, and then there are exchange controls, there are capital controls. Like some Latin American countries, you cannot hold USD deposits, for example. So even if you want to hedge against FX risk, you can't really hold USD. There are some countries like India where there are capital controls. You cannot send money outside India above a certain limit. So because of all these challenges, uh, like things like USDC or any other stable coins which are pegged to USD, for example, a more stable currency, can solve problems for these customers, and they are really helping these countries as well. If they are able to be more open minded.
Yeah. So stablecoins is not just it's so many use cases now. I still remember when USDT first launched, when Brock Pierce wrote wasn't interviewed, but he had a quote there, and then CoinDesk wrote about it. I'm like, why do you need one? And then when we actually think of it back then, why it came up was the bank accounts were a problem. So the exchanges were the first use case, but now it's evolving to actually financial inclusion and all that. But speaking about USDC, just a few minutes before the show, USDC put out a tweet that says, if it's for someone new to know about USDC, what should we be teaching them? I think it's along the lines of that. And then someone retweeted and wrote, USDC can freeze your funds. And then I wrote back and said, well, if your money is clean, okay, then you shouldn't need to worry about it anyway. And then I got a whole bunch of posts saying that, oh, you see this one supporting the government and all that, all that, all that. So this leads to my other question. What do you think? Because on the crypto Twitter side, there are a lot of Gen Z people that are they're not in jobs, they're doing things in crypto. I can consider most of them as Web3 founders. What do you think they really misunderstand about compliance, AML, consumer protection, and so on? What is the thing that you think we can actually sort of tell them why this is still important?
Right. Okay, so I think one thing that is really misunderstood about compliance is that a lot of people question that it's a, it's supposed to be a decentralized system. Then why are governments and regulators trying to regulate, trying to have regulations, and then that increases kind of burden on these, maybe as a founder. And then the other areas, there's just like more KYC, more CDD on customers, and how is it protecting my identity? It's supposed to be anonymous or pseudonymous. Um, but exactly what you said, right, Anson, that it's, if you have nothing to hide, if your money is clean, your source of funds and wealth is clean, then there shouldn't be a problem disclosing your identity, because the exchange is obviously regulated. They are also governed under data protection laws. So it's their duty to kind of have proper kind of methods and processes to control your data, to kind of preserve your data. So there shouldn't be, you shouldn't have to worry about it, because whether you like it or not, there has been cases in the past where Bitcoin has been used for ransomware or terrorist financing. So there are evidences that regulators have, and because it is, um, there have been bad actors in this space. It is natural for governments and regulators to have more laws. But yeah, I would exactly echo what you said, to say, if you have nothing to hide, then why is KYC a problem? Otherwise, I think, yeah, I mean, there's always the self custodial option, which is another way. But then you just need to be confident that you can like manage your own private keys. I personally prefer to keep it with an exchange rather than self custody.
This is an interesting point, because I was discussing with another friend. She was also on the show, Zhang Quan. She's a treasurer of Access, the association, but also she's the CIO of Revo Digital Office. We're saying that yes, it is great that you can actually take care, self-custodize your funds. But let's say if you're a Web3 founder, you're doing well, you still want to be pampered. You still want a UBS sort of account. But today, there are a lot of Web3 founders that have made it, are being treated like trash by those private investment banks because they cannot get their KYC done properly. So, for example, I know of a Bitcoin mining founder. They are having a problem. The bank is having a problem being convinced of the source of wealth, basically tracing back all the wallets. And he's been stuck there, and he is having a hard time getting bank accounts, right? So there is still this problem right now where, yeah, you want to self-custodize. It may be because you're just a average Joe right now. You don't want the banking services, but once you have made it, you want someone to hold it for you. You don't want to hold $2 billion on this ledger, right? So yeah, what are your thoughts on this, in terms of, because I heard you just said you want to put it on the exchange, and especially now there are a lot of licensed exchanges around, licensed custodians around. Where do you think this? Do you think this mindset will shift, or it's just the younger people right now that haven't learned some of the lessons from? I will call myself OG. I've been in this space for 10 years anyway. That it's just a matter of learning that they will understand it's important to work with licensed institutions.
Yeah, so It's really a personal preference, I think. Um, but yeah, I agree. If you need access to banking services, then you will need to kind of show your source of wealth and source of funds. And I'm sure if they decide to move, transfer their crypto into an exchange, they would be able to just generate a statement from the exchange and show that as their source of funds, maybe some trading, like, because they'll have a record of everything they've been doing on the exchange platform. So I think maybe once they kind of get more access, because with all this licensing regimes across the world, uh, you if you want to off uh, you know if you want to off ramp, you need to kind of go to an exchange now, right? So at some point you will want to off ramp, and I think it's probably going to go in that direction. I personally think, because there's been just so much increase in prices. So people who kind of had crypto about few years ago, now they will want to off ramp. So yeah, I mean, I hope this trend changes.
So this is good. So it segues to the next part where I want to ask you about the different regulators that are having the different virtual asset licenses, crypto licenses. With the Trump administration coming in, it seems like things have changed. Okay, so before he came in, why I say things have changed? Um, there was a lot of SEC was doing a lot of things to how do you say it, Pete? Like lawfare, as they keep saying it, right? And there's European license, the whole, and then the Singapore, many countries also are getting their licenses up, and it's just the focus of AML, for example. They're focusing a lot on making sure that the money is channeled to the right places. No, want to anti the money laundering, anti proliferation finance, basically anti the terrorist financing and all that. But now, the biggest spark what I saw was when the US at OFAC removed the listing of Tornado Cash from OFAC, right? That was huge to me because as a ex-compliance officer of a crypto firm, when you look at chain analysis, you will see a lot of the nodes touching all these sanctioned firms, right? Sanctioned nodes, right? But now when they remove it, they are essentially saying from a compliance standpoint, you need to look at it, but not in the sense that you did before because it's already off the list. So US is sort of redefining what they think AML should be in crypto, whereas the others are still there. So not just to ask about Coinbase, but from your personal perspective, are we seeing something that is not level, not unified in the whole world in terms of regulators of what they think crypto should be?
Yeah, yeah. I think the biggest gap is really in travel rule implementation, because in general, I think KYC, CDD, every country has its own standard. So every regulator has its own standard, and more or less, it is quite aligned with what FATF requires. But we are aware of the sunset issue, right? So in that sense, the sunrise issue, sorry, I mean. So in that sense, there is a big kind of lack of parity in how travel rule is implemented across the world, across different countries. That is one area where I think there is a bit of regulatory arbitrage that some companies are also taking advantage of, because all the other areas, wherever there is a AML registration, like there are still some countries where there is no AML, even like the baseline AML registration for crypto companies. That is, so let's not maybe talk about that, because most of the bigger markets across the world, they have at least an AML framework, right? And crypto companies fall under that, and they're expected to comply with that. So in that sense, they are covered within the FATF's kind of remit. But for travel rule is where I think there are lots of different standards, and you and I have talked about this in the past, right? Like in terms of how it was implemented here in Singapore, the timing and everything. So Singapore was way ahead of, way ahead in the curve to go ahead and implement travel rule, and it has been here since 2020, I believe, like as soon as the Payment Services Act came into being, and it's enforced quite strictly in Singapore. Whereas if you look at US, the rules are there, but they are not enforced at a level in which they are enforced in APAC, for example. And then UK was a follow on later. So UK did kind of implement, and Europe has implemented TFR as well. So there are this is an area where I see there is some bit of disconnect, and that has become an issue for exchanges as well, because because of the global nature of transactions that you have, if your counterparty is not travel rule compliant, it poses an issue for you to demonstrate travel rule compliance to your local regulators, because you are in a regulated jurisdiction, so you still need to show travel rule compliance. But I feel like FATF, I understand, has been putting a lot of pressure on these jurisdictions which are not fully compliant with travel rule, and they're asking them for a timeline to say they need an undertaking by when travel rule will be fully implemented. So that is on the AML area. But on the consumer protection side, again, I see there are different versions of how consumer protection is being implemented in different areas, and how comfortable or uncomfortable the local regulators are with, say, advertising, crypto companies advertising in terms of like, marketing, their marketing collaterals. So UK, I know, is very specific. So FCA has been very specific to say how exactly any kind of promotional material, so the financial promotions, should be designed. They are very, very prescriptive. Whereas if you see closer to home in Singapore, there's a broad kind of guideline on TPT promotions and what can and cannot be done. It's more high level. It's not that prescriptive yet. So yeah, we do see different versions across the globe, and the challenge for crypto exchanges to really kind of customize their, whether it's the AML program or whether their travel rule program or marketing plan, to kind of make sure that they comply with the local requirements, rather than, so there's no one size fits all anymore.
Okay, so this next question that leads to what you were saying. We were talking a lot about Singapore, saying that Singapore was very like front of the curve in terms of implementing a lot of the FATF rules and so on. Now there's consumer protection, and there's a lot more things that are going on. As I know, there are a lot of consultations that happen. Do you think that Singapore is pushing way ahead of the others when the others are not there? Because if you think from this perspective, Singapore is very, very tight with a lot of the different rules, trying to define everything, whereas the others are not. From that angle, there's already regulatory arbitrage from there. Where do you think Singapore is at the point where it's leading too much, or they should continue their position right now as to where they are?
Right. So look, Singapore is a financial hub in Asia. The kind of cross-border activity that happens in Singapore, it's very different from rest of the world, right? So every jurisdiction is unique. They have their own challenges, but the good thing is it's an open economy, right? There are no capital controls. Any amount of foreign exchange can come in or go out. There's no capital controls, unlike places like China or India, where there's these capital controls. So with that, I think what happens is that Singapore is in this unique spot where they need to manage this risk, more than any other country, because they don't have other checks and balances, right? So I understand where regulators are coming from, and also I think how much the regulator wants to protect consumers is also is up to them to say, okay, how much do I want to protect the consumers, to what level? Do I kind of transfer the risk of trading in a asset class which can be very volatile? Do I want to transfer that risk to users to say, okay, as long as you have these disclosures, the risk is on the consumer? Or do I want to go over and beyond and protect the consumers to the best I can? So it's really there's no right or wrong, I feel. It really depends on the risk appetite of the regulator, because they also operate within a risk appetite. What has been top of mind? Like, for example, scams has been a real issue in Singapore. You would have seen in the news that it's the average kind of amount for people getting scammed in within Asia is highest in Singapore as per latest reports. So of course, it's understandable that there'll be more focus on this area to make sure that these scams do not kind of are they don't they are not targeting Singaporean customers. Scammers are not targeting Singaporean customers, so there's naturally uh, there'll be more focus on this area, and more controls, more expectations from the regulators to make sure that financial institutions are really leveling up in terms of their scam prevention controls. So it's kind of very different in different markets. I think in Europe, I think maybe scams has not been a problem. I know scams was an issue about like two years ago in Australia. There were a lot of scam syndicates that were targeting Australian customers. So it really depends on, like I said, the risk appetite of the regulator, of the jurisdiction, what is top of mind for them. A lot of different factors, I think, play into that.
Yeah, you made a good point. It's like Singapore has done so much to try and get the war on scams to a level like it escalates every year. But yet the amount being scammed is still increasing at unprecedented amounts. I think it was over 300 odd million dollars just in the last I forgot how many months, but we have the largest scam center, police scam and anti-scam center in Singapore. Yet it's still happening. I don't know if Singapore needs a review to see on how to push this, because yeah, it's because last week when I talked to the friend based in Switzerland, Christine, most of it was just romance scams. And then, but when I heard it, I'm like, oh my gosh, that's very small compared to what we have here. Romance scams, job scams, executive scams like on LinkedIn is also happening. I nearly got hit by one myself. I was explaining last week. But yeah, great. So we're near the end of the show. I just want now go towards you and your personal life. You have spoken openly about being in this role, as well as taking care of family, balancing career and motherhood. How has that been for you? Because I know as a compliance officer, sometimes you really need to work late nights to get things done. And then when you go home, I'm pretty sure there's still more work to do. So how has that been for you in the recent years?
Yeah, so I've never taken a career break. I have two kids, but I have never taken a career break. So that, I think, I count that as my biggest achievement, really, because our our industry moves so quickly. A career break usually will mean you're kind of going to have to start over again, or at least take a step down, right? So that has been kind of something that I've tried not to do.
But
But
you do
that
take
did come
leave,
with,
right? Do you take leave
yeah, yeah. I mean,
sometimes?
I took the
Okay.
I took the minimum, whatever the company gave, the minimum maternity leave. But yeah, no, nothing beyond that. So I have always been employed, and I've always been kind of working, and that did kind of come with challenges, because it's not always easy to balance being a working parent and being a being a career minded person as well. It's not always easy to strike that right balance. But what helps is, I think, what I like about working in fintech compliance is that it offers you a lot of flexibility, which I think is really great for working parents, because it's not that traditional or TradFi mindset that, oh, you have to kind of show up in office every day at a certain time. Because yeah, there are times when you need to kind of take few hours off, or take few hours to kind of go up for your kid's sports day, or a drama performance, or a musical performance. So these kind of things kind of are not very easy to do in TradFi, where there seems to be, like, at least when I worked there, this was pre-COVID, obviously. There was more this requirement to actually work out of office, and it doesn't give you that flexibility. So that kind of the remote working option, and since COVID, I think that has changed. And fintech compliance kind of is, because it's, you work in different markets, right? I work across at least 4 time zones. So there's APAC, there's yeah, US, obviously US, East Coast and West Coast, quite different time zones there, and then Europe. So and some Australia as well. So because of that, I don't really, I wouldn't like call it like work life balance. I don't really have work life balance, but what what the term that I like to use is work life integration, which means you are kind of working working all the time, but you're taking breaks in between, because obviously you need to recharge and just kind of take the downtime. Also, spend time with your family, ask kids how their day was at school. So it's more work life integration for me. And I have been very fortunate to have very understanding managers who actually value productivity more than FaceTime. That has really helped me as well.
That last part, I don't. Can you elaborate more what you mean by that?
Which one? The productivity? You mean
Yeah, productivity. Yeah.
So productivity, how I define it is that you, in a fast-paced company, you need to be shipping something every week.
Hmm.
You can't just be thinking about stuff, or kind of, discussing an issue or discussing an area in multiple meetings and not make a decision, not have action items. So how I measure productivity for myself and my team is, we have a weekly team huddle. That's the first thing we do on a Monday morning. And we decide our priorities for the week. We have a lot of things that we need to get done in that week itself. And we assign it to each team member, including myself. I put my name there in that sheet as well. And we track our progress the next week. So the next Monday, we want to make sure that everything that we said we will do in this week, we have actually completed. We've shipped that product. So for us, it's not just product teams or engineering teams that are shipping products. Like, as compliance and compliance teams, we also have our deliverables, and we kind of take it quite seriously, because we don't want to be the bottleneck for business, because they want to move fast. If they are running, we need to run with them, right? So that is kind of really my model for productivity. I want to make sure that I'm shipping something every week, and my team is shipping something every week.
Wow, it's like you're running a startup, but from behind, but yet also at the front. It's
Exactly, yeah.
actually
It's
that's
not
pretty
easy.
not easy, because a lot of people misunderstand compliance, where they think that they are just being the police of the firm. I've It is actually a full misunderstanding, because you're here to protect the firm, but at the same time know where you can make money for the firm, yet you will not get into regulatory trouble, or law enforcement or enforcement comes to you. So you're being like the shield, in a way, that the company moves forward with, right? Not trying to be the the whistleblower inside. That's not the main aim of what compliance is supposed to be. Yeah, great.
Exactly.
So what advice do you give to other women in working moms in this space?
um I mean, there's a lot I do in my. I also do like one-to-one mentoring sessions, just because I want to kind of help young professionals, young working mothers as well, to how to kind of progress in their career, any advice they need. So what I would say is that sometimes things can get challenging, but don't give up. Things can get challenging. Also, I think everybody brings something different to the table. So it's so important to dream big and keep your focus, and really kind of be more result oriented rather than process oriented. Because if you focus on results, that is what is going to show you the right direction. Because sometimes there are so many ways of getting to the final goal, but if you get stuck in what do I do now, that is not probably not going to lead you anywhere. So yeah, it's not just for the working women. I think it's for everyone. to really focus on what you can bring to the table, because both men and women, they have different styles of working. As individuals, we have different things that we are good at or not good at. I think it's important to know your blind spots and try not to let that affect your productivity, affect your output. But also important to really work on your strengths. I do like to read a lot of management books. That is something that I like to do. So I don't. I think you might know there's a book called Strength Finder. So that book actually talks about why it is more important to focus on your strengths, because as individuals, as professionals, sometimes a lot of times we end up focusing too much on what we are not good at, and it doesn't help us that much. But if you focus on what you're good at and kind of leverage on your strengths, that can really change. That can be a game changer. So yeah, I read books. That is an advice I give to a lot of young professionals as well.
Nice, nice, nice. Great. So we're at the end, near the end of the show. So, which also segues to the last question. What is the remaining? Because you were saying that productivity, working with the team. For you personally, you are also on the TDX as a board advisor. For you, 2025, what is going to be your main achievement? Today is December 31st, 2025. What is it that you want to achieve that you'll be like, okay, I've had a great 2025?
Oh wow, there's so much. The list is never ending. I'm also I can't announce the name yet,
Yeah.
but that's in the making. So I've also been asked to join Neobank as an independent director, but I won't announce the name yet because it's going through regulatory approvals. So that is something I'm really looking forward to in this year, because I think I want to be able to help businesses, not just as an employee. And I'm very fortunate that Coinbase allows me to kind of get involved with two companies. So TDX, I'm already involved with them. I'm advising them, advising the board on their business and everything, and compliance matters. Uh, the other company is a bank. So that is what I'm kind of looking forward to. I want to help businesses, and I want to just like help the whole kind of crypto fintech ecosystem, and also professionals. I'm also again a mentor for the Blockchain Guardians program this year. I was last year as well. I think I've found that I I derive a good. I just like kind of helping professionals to get kind of that career break that they're looking for. Sometimes switching from Track 5 to fintech compliance, or just kind of finding the right kind of mindset for them if they are struggling in a certain area. So I honestly, having worked for so long, I want to do more, and I want to kind of just do more for people and businesses. Really, I think that is my goal in the long run. So I'm getting closer to that goal, and every year I'll be doing something new. Of course, yeah, I wanted to. I've never done a podcast before, so this is something I'm going to write in my 2025 list as well, as a
Yeah.
first. So thank you for having me.
Thank you for giving me the second chance. I think maybe in 5 years' time, when this show becomes even bigger, I will take out that archive to show what was the first show like, and then people will know that it actually takes a lot of hard work. but
Yes, it
but
is.
great.
So
So
thank you so much for all your hard work. I know it is not easy. So thank you so much for all your hard work.
any final words for founders? Because you also help Coinbase with the license. Any good words for them? How to like get their first license? What should founders be focusing on?
Right. So one is definitely speed, because a lot of people focus on getting a license quickly. Uh, but my advice, if I was to give one advice to new founders on how they look at compliance or achieving licenses in different jurisdictions, they really need to go to a reputable jurisdiction, They shouldn't just think about going to somewhere which is like just gives them a license quickly. Also, stability is very important. You should look at a regulation where regulations are more or less stable, because what you don't want is you you have a really, like, you go to a jurisdiction where barriers of entry are really low, and then the regulators change their mind, in 6 months, and then you're having to comply with a lot more requirements, and then that increases your compliance burden. And the last thing is, definitely don't take compliance lightly, because as the saying goes, if you think compliance is expensive, try non-compliance.
Yes, very true. That's actually what I wrote in my newsletters. I analyzed the different companies, obviously also analyzed Coinbase, Played, and many of the Indian fintech startups. The ones that take care of compliance early is less costly than afterwards, what they have to deal with the regulators. Yes. So great. Thanks for the viewers watching this. Just last thing, Anu, how can people reach you? Is it through LinkedIn if they want to follow your work and so on?
Yeah, I'm active on LinkedIn. So yeah, just find me on LinkedIn, and I'll try to reply to most messages. So yeah, just reach out to me on LinkedIn. That's the best way to get it
Great.
contact.
So thank you. So next we have another guest next week. It's with a DeFi company. I will keep you guys updated. So for this show, I've also learned a lot from you, Anu, the first time and now the second time, on the different the mindset shift that you have now, how you're taking care of the family and so on. And I was about to say that in terms of productivity, you're more than just that. You have goals outside of your work, which is very amazing. So thank you so much for the Americans that are listening. Have a great evening, and for Asia, have a great day ahead. Thank you, Anu. See you soon.
Thanks, Anson.
Thank you.